market structure. There's one more aspect of the advanced market structure we had yet to discuss, right? And that's basically, it's still advanced market structure, but at this point, we need to understand what a break of structure means and what an order block means and how they are formed, right? Because the basic thing we need to take our entry is our order block. So how do we come about seeing where the order block is? So that's the aspect of this advanced market structure I want to talk about. We talked about before now we talked about having a point A, talked about having a point B, and then we said that point B must be taken out, right? And probably create an inducement here. And this becomes our entry because there's an order block that has formed here, and there's an inducement here that is making that order block valid. This inducement here is what validates this order block. But then, before all of this happens, if you were going to read this in the charts, right, you need to know how to read it. You asked me, where do we begin our analysis from? What do we do? And frankly, you can start your analysis anywhere. As long as you're looking at it from the higher time frame, you can start it anywhere. But before I go into starting to do analysis, let me revisit the concept of break of structure and then order block. Now, we know that an uptrend is higher highs and higher lows this way, right? This is an uptrend. So for us to say that this structure has broken, remember I said, for you to even say that it's a structure, all of the liquidities must be interconnecting. They must be coming into each other like this. They must be coming into each other like this. That's the only time you can say that this is a market structure. This is a valid market structure. So for you to see a break of structure in this market, it means that market has to take out this last, I think that's a higher low, that last higher low there. Market has to take out the last higher low here. This is where you have a break of structure. And it's a break of structure because it is connecting all these other points here. That's basically why it's a break of structure. It's connecting all these other points here. Sorry, I need to reduce this. It's connecting all these other break of structures. All these, they are all interconnecting. Like this is a break of structure here. This is another break of structure here. So they are all interconnecting, and that's why when market takes out one of them, you can ask that, oh, this market has broken structure here. This market has broken structure. So you have a break of structure. Now, what we want to see, right? This is now this market has broken structure now to face the sell direction. But what we want to see is, we want to see market make an inducement into the structure that it broke out from. So we want to see an inducement like this. Then we want to see this inducement taken out, right? And then we want to see what? An inducement and an overall break of structure. When we have this, we can now see the market has created an order block here that is valid because of these inducements. And of course, this sweep here. This sweep here. Because of this and this sweep. So market has created this. So we are just expecting market to come back into this zone and sell. So, but then if you remember what I said in the first diagram I drew, if you're looking at it from the point of view of we have this is a downtrend. Now have this, and then we have a sweep of liquidity here. This liquidity, remember, this is A and this is B. We have a sweep of liquidity here. We have an inducement here. We have a break of structure, and then we have this. So if you look at this looks exactly like this. But there is something about this that is not fully explained here. Let me call this A. There's something about A that is not fully explained in B, right? A tells you, A is like you're reading, there's a story in the market you are reading, you're understanding the story, you're seeing where the market is coming from, you're seeing where market has done a break of structure, you're seeing all of that. But this one is just a schematic of what a sell structure should look like. Now let's do the same thing for a buy structure, where we have so have a market that is coming from a sell trend with lower highs and lower lows, lower highs and lower lows. And then market makes a break of structure here and gives an inducement into the zone. So you expect the market should come and take out that inducement, create a liquidity, and then break structure overall, so that we have an order block here. Remember, this is our break of structure. This is your market broke structure and gave us this inducement. Now, the inducement must come into the structure that it broke. It must come into, for you to say it's valid, it has to come into the structure. This is where market broke structure. This is the POS here. This is your market broke structure. So this inducement must come into it. Has to come into it to be valid. If it doesn't come into it, that whole zone becomes a liquidity on its own. So it does this, gives us an inducement, sweeps that inducement, creates a liquidity, and then breaks structure. Once it does all of this, it now has a valid order block here. It has a valid order block here. Let's call this OB. Let's call this OB. So let's call this OB order block, right? So this order block is valid because of these inducements. And then we can now expect the market to come here and buy. This is what we should expect. The market should come here and buy. This is what we should expect, right? So these are the basic structure. So it's still the same sweep of liquidity here. This is sweep here. Sweep of liquidity, inducements, break of structure, where this is your A. This is your A. This is your B. Sorry. This is your B. This is your B, right? So B is taken out, creates and makes a sweep, inducement, overall break of structure, order block, entry. Simple as that. Now, there are times when market does something like this. You have higher highs and higher lows, higher highs and higher lows. And the market comes here and does this, and then breaks here. This, please, is not a break of structure. It is not a break of structure. So if this happens and you see something like this, inducements, sweep of inducements, liquidity, overall break of structure, this is not going to hold. This is not going to hold. Why? Because this point here is not a break of structure. So it's not going to hold. Let me see something. Just hold on. I'm trying to get. I'm looking for where the numbers, the letters are rather. I think it's here. Texts, note, pin, command, blah blah blah, image, idea. Where is it to? I can't find it. I'm trying to see where the letters. There are some letters that are supposed to. So this is not correct. This order block here is invalid because this is not a break of structure. Instead, this one here will now be our break of structure. Instead, this will now become our break of structure. So what we want market to do is to break this structure here, right? Give us what? An inducement into that zone. Come and take out that inducement, create a liquidity, break overall structure, and you have your entry here. This is basically what we want to see. So for this pattern, this is where you have your break of structure. This is where you have your break of structure. Not this, because this is not connecting to this. If this had come into this zone here, then breaking this one would have been our break of structure here. And this should have been the sweep, inducement, blah, blah, like the whole setup. But this is up here. So all of this does not represent a break of structure. So whatever market forms here is invalid. I don't care if it holds for 1 minute or 1 hour or 2 hours, it's invalid. It's going to lead to stop loss. That one is 100%. It's going to lead to stop loss. So for you to say that there's a breakout, so the things we are looking for, number one, we need to identify the breakout structure, number one. Then we need an inducement into that breakout structure. Number two, we need the inducement to be swept. We need the liquidity to form before the breakout structure. We need a second break of structure, right? Then take trade at valid order block. So break of structure, we need to identify break of structure. Let's follow it through again. We need to identify the break of structure. Let's start with the downtrend. We need to identify a break of structure. This is going to, let's say you have this, right? None of these are break of structures. Instead, this is going to be our break of structure here, this one. So you want to see a break of structure, you want to see an inducement, you want to see the inducements we want to see that inducement swept this way. You want to see a liquidity that forms. This liquidity can form either before it breaks the structure, or it can form after it breaks structure like this. On that break of structure, then this becomes our entry. This is basically what we want to see, right? This is how the advanced market structure works. So this is where our break of structure is. This is where our break of structure is. Not all of these ones, all of these points here, this is not a break of structure, because they are not interconnecting. They are not valid higher highs and higher lows. The higher highs and higher lows are only valid if they are connecting together this way. That's only when it's valid. If this happens, then this point here becomes your break of structure. Then you want to see an inducement into it. You want to see this sweep. You want to see this break of structure, inducement again, then another break, then valid order block and entry. That's basically what you want to see. That's it. Do you understand? Are you understanding to this point?
I'm understanding it, what you're saying, but I guess I'm yet to see it on the chart.
Good. Now let's go to the charts. Let us go to the charts. I had the chart I wanted to show you. I think let's use volatility. It's 25S. Let's use 25S. Let's use 25S. So this is 25S, right? So based on what we have said, right? Let's go to 4 hours time frame. Based on what we've said, remember we said that liquidity has to be what? V-shaped.
Swift.
Like it has to be obvious. It's not a candlestick, especially if you're looking at it from higher time frame. It's not exactly a candlestick. It has to be obvious. So if we are looking at this from this point, now let's say we're looking at it from here. So you have this one, right? 2, here. You have this. We have this. We have this. This is 4 hours, so we can use this. Then we have this here. And then we have this sweep. And then we have this. Now let me remove it from here. Let's draw this properly. So based on what we just said, where would you use as your break of structure? is obviously this point here. This is your break of structure. It's obviously this point. Why? Because this is not coming into this zone. This one is on its own here. This point is also on its own. So this is the original break. This is the actual break of structure of this trend, which is this point here. Which is this point here. This one. This is the break of structure of this point. Now, what are we seeing? We are seeing what? An inducement. We are seeing an inducement into this zone. We need that inducement to be swept. Remember the second, we need that inducement to be swept. And then we need it to create a liquidity before breaking this structure so that this order block here is going to be valid. But it did not give us any liquidity inside this place. There's no liquidity close to this order block. If we had seen something like this, let's say something like this, and then it broke structure, then this order block here would have held. So there's no liquidity. So, and once there's no inducement or liquidity close to that order block, this whole zone here becomes what? A liquidity on its own. So now what we are now considering is break of structure. All of this now becomes what? The inducement that we want to see after the break of structure. Then that inducement is what? Taken out. You can see that inducement is taken out here, right? You can see what? This liquidity here, and then we can see what? A break of structure. This is a break of structure here now, right? So what does it mean? It simply tells us that this order block here has become valid. This order block here has become valid. Extend right, let's see where it is. It has become valid. And what the market, you can see the market came in there, gave a proper confirmation. Look at the inducement of that liquidity. Look at the bearish engulfing. Perfect confirmation. Bearish engulfing. At the close of this bearish engulfing, that becomes your entry. This is almost, the stop loss on this is very, very, you can see how slim this stop loss is. This is how slim the stop loss is. It is extremely small. Extremely small. This is how slim the stop loss is. So the same thing every time. You're looking for the same thing every time. You want to see a break of structure. Identify a break of structure. Make sure that there's an inducement into that break of structure. That inducement has to be swept. Right? Once that inducement is swept, then we want to see a liquidity that is close to the order block. Then an overall break of structure and entry. Now, that is one aspect of advanced market structure. This is in line, this is when you have market moving in its say dominant direction. So if this is buying, you see the market is moving this way, you can have this. But then again, these pullbacks, now this is what I've told you before now is market structure 1. Now I want to tell you market structure 2. They are still all break of structures, but you need to understand how they are formed. So every time market makes an inducement this way, you have to check if there is a valid break of structure. If you have something like this here, right, then this becomes what? Our break of structure. So what do you want to see? You want to see a break, an inducement gets taken out, gives us a liquidity close order block, break this structure, right, and then come into this zone. This is also correct. All of the things that should happen in along the major trend is now happening on the minor trend. They are still the same thing. It is still, but now if you see something like this, I'll show you on V10. If you see something like this, and then you have a break of structure here, right? But then you have this as an inducement, and the market continues to move up this way. There's nothing here that is valid. What it simply means that market is going to go up at some point and just push down this way. There's nothing here holding this market. This whole zone is a liquidity zone. Why? Because this inducement did not come into this zone. Now I've shown you on what they call it, V25, V25 1S. Let me recap. Assuming you have a market that is coming down trend this way, and you're looking for a buy, obviously. So you want to see where market makes a break of structure, makes an inducement, right? Then market takes out that inducement, right? And creates this and gives you this. So this is one. The second one is whereby you have after the market gives you a proper break of structure here, then you have an inducement here this way. This inducement now forms what? A break of structure here, gives you the first liquidity. When liquidity gets taken out, right? Creates an inducement here, breaks overall structure, and then comes down here. This is still also correct. You're looking at it from if it's a sell trend, what you want to see is this. If it does this and does this, then this is going to be the break of structure. You have an inducement. You want that inducement to be taken out. You want it to create a liquidity here. You want to break a structure and order block entry. It's as simple as this. Another sell is that you have this here becomes what? Our break of structure, inducement. Remember, inducement must what? Be taken out, right? My break structure, give you under inducement, break structure. As long as there's an inducement close to the order block, it makes the order block valid. So break again, enter this way. So you have break of structure here. You have BOS here. You have BOS here. You have the inducements. This is inducements. This is inducement. Inducements get depth. Market creates another a liquidity close to this order block here to validate it. Then break structure again. Break structure again here. Break structure again here. And comes to take out the order block, right? So now let's look at it again from this perspective. Let's go to 2 hours and see. I feel like if we do more chart examples, it's going to make it easy. So from here you have this is sweep here. Sorry, hold on. Okay, good. From here you have this. Now for this is the break of structure here. This point here is the break of structure. So you can see what? An inducement, right? That inducement gets taken out, right? And the market creates what? A liquidity close to the order block and breaks overall structure. Then it validates this order block here. Validates order block here, and this becomes your sell. Can you see? This becomes your
I'm seeing.
Yeah. Now, again, if we check this trend here, if we check this trend from here, right? This is also the break of structure for this, right? This is also the break of structure for this. Sorry, let me draw that break of structure properly. This is also the break of structure for this. So we said break of structure what? Inducement here. This is inducement. You can see it here. No matter how small it is, as long as it's back into that zone where market broke structures and inducement, then what are we saying? Inducement has to what? Be taken out, right? Then market will create what? A liquidity close to the order block. Break structure here. It gives us another what? Valid order block here. Can you see? Another valid order block. The same thing every time. The same thing. If we have this, like from here now, let's say, let's just take it from here down here, right? And then give us this, give us this, give us this, give us this. Now, where is the break of structure here? This is obviously the break of structure. This point here is the break of structure, because all these other zones are not exactly connecting. If you look at it, they're not exactly connecting, right? 1, 2, 1, 2. Yes, this is not a break of structure. Had it been this high here, maybe as market came here and made a new high, right? Then this would have been a break of structure. Are you getting what I'm saying?
I'm seeing what you're
Yes, that
saying.
would have been a break. So, but there's no break. The break of structure is not here. Instead, this is the break of structure. Why? Because market gave us one. This one came into it here. Okay, I think this also came into it here. I think this also came into it, right? So this is now our break of structure. This is now our break of structure. This is now our break of structure. Let's see if you can see something on a lower time frame for that zone. Sorry, hold on. One, two. So there's no break of structure here. This could also represent a break of structure here. This one, because they are connected together. If you look at it closely from here, are they on the same level? I'm not seeing it clearly. Let's put a line there. So they are literally on the same level. So we can't use it. So this is where we have our break of structure here. This is our break of structure. So what are we looking for? We're looking for what? An inducement, right? We're looking for an inducement into that break of structure. Now the inducement is supposed to be taken out, but this has not been taken out. If we check this also, this is also going to represent what? The break of structure for this. Here is going to represent the break of structure for this. Then we have an inducement that gets what? Taken out. Sorry. We have an inducement that gets taken out. This is looking like a liquidity, but I don't trust it. This is 15 minutes, so I don't trust it, right? Personally, I wouldn't want to take that trade. So now we are following the chart up as it is. Normally, if this were correct, market should come back here and sell, right? Market should come back there and sell if that was correct. But let's leave that line there and just wait and see what the market does. Let me delete all of this. So also, if you check here also, all of these are just simple break of structures. Break of structure, break of structure, break of structure, break of structure. Now, look at this break of structure here. Break of structure here. Then what did he do? He gave us what? An inducement. Can you see? He gave an inducement. Then inducement was swept here. Inducement was swept here, right? And then market gave us what? A liquidity. Look at this liquidity. It's actually valid because it's obvious, right? And then market came into this zone and started selling immediately. You can see it here too. You can see the sell. So sometimes that's why we have to train our eyes enough to see what the market is doing. We need to train our eyes enough to see what the market is doing. We've identified that there's this point, there's a sweep of liquidity here. There's a sweep of liquidity here. There's a sweep here. A sweep happened here, right? Then we can see, even if we don't use this as inducement, this on its own is also an inducement because it's up to 50%. This on its own is also an inducement. Another break of structure here. The market comes here and takes it out. Very simple. If we also want to catch, maybe say the next move on this, just identify where the break of structure is. And if we're going to identify where break of structure is, then let's use a 1 hour and see. In fact, let's go to 30 minutes and see. So what do we have? We have what? This point here. Between here. Okay, hold on. Let's minimize that a bit. Let's draw the arrow properly. From here, we have this. Have this here, then this is here. Now, this thing here did not exactly enter into this zone. So I'm not going to say that there's a break of structure there. Instead, let's see. So I'm not going to say that the break of structure here that we should expect to see is here. This is where the market is going to break structure eventually here. At this point, overall, if you're looking at it from the higher time frame, this is where market is going to break structure. So if you break structure there, what are we expecting to see? If it comes here and breaks structure, we are expecting to see what? An inducement. Then the inducement gets what? Taken out. Creates, say, a liquidity here, break structure again, and come back for a continuation. It's as simple as this. It's as simple as this. There's no I can't say there's any other thing that is there to learn. Another thing, if we are going to consider for another entry, this point here, look at this point here. There's a sweep of liquidity here. In fact, I think this is actually the break of structure. So if we have from here to here, we have this, we have this. You can see that this point here is actually higher than the other one. So we have this again. So this is going to represent what? This point is going to represent our break of structure. This point is going to represent what? Our break of structure here. So once we have our break of structure here, we want to see the market make an inducement into this break of structure. Then we want to see that that inducement gets taken out. If it gets taken out and creates a liquidity here and breaks overall structure, this other block here becomes valid and then we can sell. So you keep following, we have to keep following the chart as it makes all of these things, like I said, market engineers liquidity. So as it's engineering that liquidity, as the market is creating those liquidities, you are understanding where the market is going to. You're understanding what the market is doing. So market can no longer take you by surprise. You know what it wants to do even before it does it. Right? So this is for V25 owners. All charts can be analyzed like this. Find out where the break of structure is. Sometimes it's on the pullbacks. Sometimes it's on the pullbacks. As long as they are interconnecting and it breaks this structure, you have an inducement. You want to see that inducement swept. You want to see a liquidity and an overall break of structure here. Then this becomes entry. It's as simple as this. It's as simple as this. It's as simple as this. Or you have this is for a sell. So for a buy, you want to see it break structure, inducement gets taken out, creates a liquidity, break structure again, and entry. It's as simple as this. There's nothing else we are looking out for. So it still takes us back to the A, B, and C, but this is a more simplified approach to understand all of the A, B's, and C's. It's actually more simplified. So you can go back, watch this video. I'm going to send another link once this one expires so that we can let's analyze at least 3 or 4 charts and let's know that that's what we are going to be waiting for the week. Right? We are entering a new week on Monday. We are going to analyze 4 charts, 4 pairs. We're not going to check any other thing apart from maybe up to 5 pairs. We're not going to check any other thing apart from those 5 pairs. And before the end of the week, we are going to get entries in all those 5 pairs. 100% correct entries. We're going to get entries from those 5 pairs. So get your account ready. I told you before, lately I was really busy. I was here and there, but my schedule is cleared. So from this weekend, from Monday, I'm very available. I'm going to be on my charts. We're going to be trading together, hand in hand. I'll send you trades you take. Sometimes you can analyze and send to me, right? So that I'll check it and see if it's fine, if it's okay. Then we wait for it together. But if you follow this approach, it's almost impossible. It's not impossible anyway, but like I said, it's just almost impossible to get your analysis wrong. You know that this analysis is going to play out. It's going to work because I have seen everything I need to see. I've identified my break of structure. I have seen my inducement into the break of structure. That inducement has been taken out. There's a liquidity that has formed. There's another overall break of structure that's happened. Then my order block is valid. Once we have all of that, then I do not think we have 2 minutes left. I do not think that it's going to be difficult from there. Maybe let's see if we can analyze volatility. 25. We need 25 owners. Let's do 25 now and see. So These are all breakup structures. This is a breakup structure here. There's nothing here. This is a breakup structure. This is an inducement, right? Remember, inducement must be taken out. This inducement has not been taken out. This is another breakup structure, right? And then inducement. Unless possibly, let's look at it on a lower time frame. Maybe, good, there's a breakup structure here. If you look at this closely, 1, 2. So this is now our breakup structure. This is now our breakup structure. This point here becomes our breakup structure here. Our breakup structure. This is the inducement. This is the inducement that's happened there, right? And we can see that inducement has what? Been taken out. Inducement has been taken out. We can possibly use this as liquidity before the breakup structure, or we can use this other one here, this one down here, we can use as breakup structure, and this is supposed to be our entry. This is supposed to be our entry here with a very tight stop loss, very tight. So this is supposed to be an entry for this chart. But I don't like this liquidity here. I would have preferred it if it's obvious and it came down into this zone like this. I'd have preferred it, but you could also see hold, because I mean this is a lower time frame and it's almost, you guys say, counter trend, so it could hold. We still have to look out for those are confirmations at entry. I said confirmation is that market is supposed to induce this zone and give us a bullish engulfing here, and then that becomes your entry, right? If you're also looking at it from the sell aspect, let's look at it